Record. There we go. So a couple announcements to kick things off. eBoard and Spartan Journal applications, guys, they are due a week from today. So they opened last week. They're open, or they close next week. Those are available on our website. That'll just link you right to our Google Drive. And if you guys have any questions about those, reach out to Vincent Pacello or Jay Karanama, who are the incoming president and vice president next year. So. The other announcement here I wanted to quickly highlight is next Thursday at Professor Schiestel's Advanced Wealth Management class, Finance 470, Justin Castelli and Taylor Schulte are going to be coming in. If you guys aren't familiar with them, they're the advisor of the AGC, the Advisor Growth Community. It's a group of advisors that meet every month. I know Professor Schiestel is a member of that. They're big marketing guys, and that's what they're going to be talking to our class about is social media marketing and all that stuff. And we want to extend the invitation to WMA members, anybody who wants to come. So we're going to be putting that on our events list. Make sure to keep an eye out on our emails, on your email, because that's where we'll be sending out the link for that. So before I kick it over to you, Varun, quickly, I want to give our spotlight for the week, and that is to our editor, Jake. So Jake wrote about the new age of stock influencers. It was a great article. I see there he talks about, the new title Elon Musk has given himself over there at Tesla. So you guys should definitely check that out. So with that, Varun, I will pass it over to you.
Thank you. So this week I wrote about the NFL finalizing a new 11-year media deal. And the big news to go along with this is that Amazon will now be given exclusive Thursday night streaming rights. They'll be paying nearly $1 billion per year, which sounds like a lot, but is marginal compared to others such as Comcast and Disney, who will be paying well over $2 billion a year for those streaming rights. They have a much more inclusive streaming rights deal, which is why they'll be paying more. A statement by the senior vice president of Prime Video stated that the deal will give tens of millions of new and existing Prime members exclusive access to live football. And this claim is just helping to make Amazon even more enticing than they've already become. And then with this new media rights deal in place, the future of the NFL appears hopeful. This year's Super Bowl was the lowest stream since 2007, and that's partly due to a lack of in-person attendance, which led to fans not keeping up as much throughout the season. With vaccination rates increasing and restrictions slowly lifting, the NFL is hopeful that there will be a return to normal streaming numbers. Now I'll pass it off to Andrew.
Thanks, Varun. So I'm going to be talking about Michigan State. Our basketball team is currently kind of caught in a rivalry between Dan Gilbert of Rocket Mortgage and Matt Ishbia of United Wholesale Mortgage. So as an MSU alumni, Gilbert gives a lot back to the state of Michigan and our university as a whole. And on the other side, Ishbia was actually a walk-on for the basketball team during his time here, and he went on to become the CEO of the current fourth largest mortgage lender. And a fun fact, he was actually on the championship team in 2000 with Mateen Cleaves, and now they actually work together at his company. So last month, he donated $32 million to MSU's athletic department. And a few weeks after that, he came out to say, on a separate note, that he believed Rocket Mortgage was trying to put mortgage brokers out of business. And he asked brokers who worked with United to sign a document saying they wouldn't do any work with Rocket. And in response, Rocket told brokers not to be bullied. And they stated that their success was making United Wholesale Mortgage kind of play defense. And just last week, Rocket upgraded their sponsorship of the basketball team, where the team's now going to be known in the Breslin as the MSU Spartans, presented by Rocket Mortgage. And the figure for this deal is not public information. So after this, Ishbia went on record saying that he wished Gilbert would donate $33 million and kind of one up his donation. And kind of like a little bit of background, United Wholesale Mortgage went public in January, and it was the largest SPAC of all time. And then on the other end, Rocket was one of the tickers involved with the Wall Street Bet subreddit a few weeks back. So they've both got a lot going on recently. But at the end of the day, the real winner in this rivalry is Michigan State Hoops. And that's all I've got.
So this week I wrote about the work environment post-COVID-19 and what it might look like. So as we all know, a typical day for someone that has a job or is in school might consist of just getting up and heading to your laptop or computer to get on a series of Zoom calls for the rest of the day. But now that the businesses and schools are opening up again, people may question what the work environment will be like. So businesses will have to maintain cleaner work environments and follow COVID-19 laws to safely remain open. Plan for everything to be staggered, especially work hours, daily or weekly shifts, workspaces, lunchtimes, etc. Companies are considering using a strategy of following government guidelines to maintain safety and bring their employees back to work. 79% of companies are already implementing safety plans by providing face masks for employees. Employees might have to work a hybrid schedule, such as 3 days in office and 2 days at home. And another factor that employees might be concerned about is if their company will require them to receive a COVID vaccine to return to work, which legally employers can require their employees to be vaccinated, but it might depend on the job. Many businesses will want their workers to be vaccinated to ensure safety and to encourage people to go out and help the economy out again. So with that, I'll pass it over to our friends from Wipfli.
Awesome. Yep, Leah, take it away.
I did not know that there was that much going on with MSU hoops. Like there's like a very significant rivalry between mortgage lenders, which I don't think the Badgers can say. So I learned something. We do have some slides prepared, but I want to give you guys a little bit of an overview of what we're going to do today. So our presentation is going to have two parts. We're going to talk a little bit about ourselves and who we are as a firm, and then we're going to do a demo of the financial planning software that we use. I don't know how many of you have actually had an internship where you use financial planning software, but it's one part of the industry that you oftentimes don't get a lot of experience in until you get hired full time. So we thought it might be helpful or interesting for you guys to be able to see the type of software that we use. So I will go ahead and just jump right in. Hopefully I share my screen correctly, because as you pointed out earlier, my entire day is Zoom calls. So you'd think that I have this down by now, but it depends on the day. There we go. There we go. So we are fairly new to your guys' school. I actually have connected with Professor Schiesel back in 2019. So we are Wipfli Financial. We are an RIA, so a registered investment advisor. And we are headquartered in Milwaukee, Wisconsin, but we have offices all over the place. I brought two other people with me today. So do you guys want to go ahead and introduce yourselves?
Sure, I can start. My name is Marshall Lund. I'm an advisor with Wipfli Financial Advisors. Unfortunately, I did go to University of Wisconsin, although if it's any consolation, I think I picked MSU to win more games in the tournament than the Badgers this year. I've been with Wipfli for just over 6 years, started in the Milwaukee office and now work in the Chicagoland.
Marshall, of course, throwing in something about hoops there. Hi, guys. My name is Josh McMahon. I am also a graduate from the University of Wisconsin, and I'm an associate advisor in our Madison, Wisconsin office. And I was also an intern prior to starting full-time here at Wipfli Financial.
And then my name is Leah, as Justin already mentioned. I am a CPA CFP, so I'm a dual credentialed practitioner. So I practice in this sort of a specialty area of investments, financial planning, and tax planning. I am also a Badger. We're all Badgers. Sorry about that. We don't have any Trojans, but that's why we're here. So I am also a Badger. My background is specifically in tax. I've worked in the Madison team for almost 5 years now. And then I also lead our financial planning team within our firm. So as I mentioned, we have our headquarters in Milwaukee, Wisconsin, but we actually have a much wider group of offices than that. So a little bit of overview about our geography and sort of our size. We are currently in, well, all the blue states here. I'm not going to name them for you, but the majority of our presence is in the Midwest. So we are very deeply ingrained in Wisconsin, Minnesota, and Illinois. And then we also have a whole bunch of new offices that are opening up on the West Coast and some more on the East Coast. So that's been really exciting. I think since I started with the firm, we have added offices in 5 new states, I want to say. Marshall might even have 1 additional state on me because he has a little bit more, I think he has 1 more year than I do with the firm. What makes WFA a little bit unique is that we really focus on personalized service and integrated service for individuals and families. So we're talking about combined tax, estate, financial planning, investment management, the whole deal. We serve about 1,900 clients across the United States, and right now we have about $4.5 billion under management. So when we talk about within the RIA marketplace where we sit, we are fairly large, and we are technically a national firm. And then in terms of employees, we have 90 plus employees, and I think that's actually a full-time headcount. So that's not including all of our interns. And then we have we're very lucky in that we have a number of practitioners within our practice who are subject matter experts in their field. I already mentioned that I'm kind of a hybrid where I have a specialty in tax and financial planning. My boss is a JD, so he actually has a law degree and his background is in estate planning. And that's one of the unique things about our firm as well, is that we have a lot of those sort of hybrid or dual practitioners so that we can deliver very customized and specialized service to our clients.
All right, I will take care of this one. This one's a pretty exciting slide from my perspective. Hopefully you guys find it exciting as well. But it's, I think, hopefully everyone on this Zoom call here kind of some of these things resonate with you, because these are aspects of the career that get you excited about being in the wealth management industry. And I'll start with kind of the upper left-hand piece of the slide. And this is something that we actually show clients and prospects, because there's a lot of connotations about what a financial advisor is and how they work with clients. And more conventionally, in that competence section are the things that now clients are coming to expect as like a baseline. It's kind of implied when your title is financial advisor, you work for a wealth management firm. Investment selection, yes, of course. Asset allocation is maybe, how in 10, 20 years ago is how the industry kind of evolved to be more than just a broker where you place trades and that's how you made money, believe it or not, even though most trades now are free. And then you kind of evolve to the financial planning. You're adding services on top of the things that you do with clients. Risk management can go in all areas of insurance, or even kind of mold into some of the areas in estate planning. Tax considerations, as Leah described, different firms have different types of tools and resources in-house to be able to add value to clients. And this all kind of falls under the competence bucket, the technical expertise, if you will. One of the things that I was told kind of early on, at least if you guys are going to a very great school, you guys are all part of this organization, so I'm sure you're talking about things that are putting you ahead of your peer competition for jobs and internships and careers in this industry. And it's the technical aspect is something that can be taught. Now, some of these other aspects of the business are things that you kind of have to have some natural talent or training or a passion for. And experiential, I always get frustrated with this aspect because I'm not fooling anyone with my age. And a lot of our advice, we'll go into a slide, later on in this deck here, the median age of our advisors is 30. And so that's a bit of a unique stat for a financial advisor firm, because I think not to profile financial advisors, but, people kind of have a connotation of what those, what the skill set or how much experience someone should have when they're talking about their money and finances. But we've really been pleasantly surprised with how receptive clients can be. So as long as you have the competence and other skills involved in working with clients that financial advisors should have. And so I won't list the other ones kind of line by line here, but the more experience you have in the industry, the more you can empathize with clients. And then the counseling and continuity aspect, to be able to have the more intangible skills in order to work with clients, it's going to be a maybe not surprisingly emotional now that, I've worked so long in the industry after 6 years, but it is something that, we're constantly, working with clients through life transitions, and it can be quite emotional at times. And to be able to, pivot conversations and, know when to talk and when to shut up, I think are really key skills that you learn the more experience that you get. I still haven't learned that last one though, the when to shut up one.
I'm muted for a reason there, Marshall.
All right. So the client journey, I think the previous slide kind of outlined, where financial advice come into it. And that's where, I should have said kind of on the last one, more conventionally, people think of like the bigger banks, the Morgan Stanleys, the Merrill Lynches of the world, that were, sort of pioneers in the discount brokerage model, and have since evolved their practice to have, goals-based financial plannings, investment management offerings. I think those are pretty standard and things that you guys have probably heard. Now, what clients are also coming to expect, and this is all, there's been a lot of whispers about fee compression, robo advisors. Anecdotally, where we've really experienced, if you can call it fee compression, in the registered investment advisor world, is you have to add services for the assets under management cost. It's the same percentage. Some people are, moving in and around the 1%, but by and large, that's been pretty consistent, and we're adding services for the same cost. So, in and of itself, I guess you're kind of reducing your cost for the services that you're providing before. And, working with, we have an asterisk next to the tax planning, because we can provide tax planning and, education around certain aspects of taxes. But as I was telling a new client today, everything you're going to see around tax planning is going to have that asterisk when it comes to us, because we have to leave the tax advice to the accountants. And the same goes for any advisor that's working in this industry, particularly ones that are governed by the SEC, that all registered investment advisors are. And so that's where we have a competitive advantage, because we can have accountants in meetings with us, paired together. We call it like our private client group, where there's an umbrella over, the actual delivery of tax advice and all these other services that we can provide the client. And
that's actually a point that I forgot to mention. Another feature of us that is somewhat unique is that we are an RIA inside of a CPA firm. So I'm dual credentialed because I work for an RIA that sits inside of a CPA firm. And to Marshall's point, although we advisors, and by we, I mean Marshall and Josh, because I'm a different case, but our advisors don't provide tax advice, but they do work directly with tax practitioners who are part of an integrated team that we serve our clients with, which is the private client group that Marshall just mentioned. So a lot of what is shown on this slide has to do with our relationship with our CPA firm, which also has a very large consulting arm. So where WFA is 1,900 clients and 90 employees, Wipfli LLP, the CPA firm that we sit inside of, has 2,300 employees. So take WFA and then expand it by several multiples, and that's the reach of Wipfli.
some of the other services listed on here, you guys have probably been introduced to retirement plans for companies, business planning for small middle market business owners, estate planning. One of the things that's becoming more of a hot commodity as far as advisory teams and services go is philanthropy and charitable giving, to be able to have more creative ways to work with clients there. It's a great way to connect with clients on a deeper level.
Marshall kind of alluded to this earlier, but as he kind of spoke about, there's a large demographic shift going on within the wealth management industry as well. We're seeing a lot more younger advisors like Leah, Marshall, and myself. And one stat that kind of sticks with us is that for every graduate from a CFP program like MSU's, 2 financial advisors are becoming eligible for Social Security. And that's kind of, I think, shown within, WFA's staff. As Marshall mentioned, our median advisor age is 30 years old. So we have a very young advisory group. And as well, to add on top of that, we have a fairly split staff between females and males. And then part of that stems from our internship program. As you can see, we have had 37 interns over the last 5 years, including 4 this past summer. And we really strongly try to hire our interns into an associate role after the completion of their program.
Yeah, and I will say that one thing that WFA has always felt very strongly about is recruiting interns to hire. So one of the reasons why our median age is 30, and I will say I am the second oldest person on my entire team. The only person older than me is Dean, my boss, who is a balding man in his mid 50s. So I'm the second oldest on my team, but the reason why our median age is much younger than most firms out there is because we believe in investing in young talent, because it's good to have experience, but it's better to have longevity. And we've seen so many demographic shifts in not just the industry overall, but in our client base. And more we're seeing clients who are coming and looking for financial advisors who are younger, from a succession plan standpoint. You don't want to be 65 years old and have an advisor who's 60. They're gonna retire. That's a problem. But also we're seeing younger and younger clients. So we're seeing clients who are coming to us at age 25 or age 30 and looking for help managing their assets or building a financial plan. And most people want to work with an advisor who looks more like them. So that's something that WFA has felt strongly about and has invested in. So what does it take to be a successful advisor? I did a podcast with Justin back in December where I think we talked a little bit about this, and Marshall alluded to this as well. The best skill that you can have as an advisor is being a really good listener. You can be as technical as you want, but that's table stakes. You can learn how to be really technical. And some of the best people, the best technicians I know, they aren't advisors. They're traders or they're in operations because they have that mindset to be able to work through the nitty gritty of a problem, but they have a harder time communicating it. So learning how to be a really good listener is the first thing you need to do to be a really successful advisor, because it's very difficult to build a connection with somebody if they feel like you're not listening. Another thing that Wipfli really focuses on in our training for new staff and advisors is developing something called an outward mindset. What that means is literally think outside yourself, which seems pretty self-explanatory. It seems pretty intuitive, but especially when you're working in situations that are high stress or you just have a large workload, which during certain times of the year, Marshall and Josh and I will tell you, not a good time to ask us for a favor or help with additional work because there's a lot going on. Having an outward mindset and developing that as part of your professional practice is going to allow you to continue to work really efficiently, but also build relationships both with your clients and your team members. And in order to do that, you really have to have an actual desire to help others. So that's really, really important. And then from the advice side of things, in order to be a great advisor, you have to believe what you're saying. You have to believe in your value proposition. You have to believe that what you are providing to the client in advice and in service is worth what the client is paying. And you have to believe that you're capable of helping people. So it's really important to be able to develop that. And I would say the third one is actually, as you mature as an advisor, is the hardest thing to learn. One of the associates who works on my team right now, she's just taking on clients in a primary role right now. So she's becoming the primary advisor. And the hardest step in that process is learning to be the person who says, this is the advice we're giving, and feeling confident in doing that. So those are probably the biggest things that you need to be able to do to be a successful advisor. Then in terms of career development tips for right now, well, you're already in a CFP qualified program, which is pretty important. If you are in MSU CFP program and you are considering not taking the CFP, that makes no sense. Don't do that. The industry is really pushing the CFP as the gold standard for credentials, and anybody who works in our firm as an advisor, the expectation is they will sit and pass the CFP exam. So definitely learn as much as you can now, but also make that part of your career plan. Understand that that's going to set you apart from other practitioners, because as Marshall was saying earlier, it used to be that you can make money in wealth management by just executing transactions. That's not the case anymore. Nobody makes money doing that. Charles Schwab doesn't make money doing that. So you're certainly not going to either. The next piece of it is you guys have, I know it doesn't feel like it, but you have more free time now than you will have ever again in your lives. So take advantage of that bandwidth and get really curious. Go out and find information, no matter how esoteric it is. If you find something, I just read something the other day about NFTs, non-fungible tokens. Have you guys talked about these yet? Most bizarre thing. Why? So really, you have the time to chase that stuff down now. Get really curious, find those sort of things that you find interesting or exciting, and pursue them. Start looking at industry blogs. If you're not already following Michael Kitces, start now and then read the entire backlog of his blog. There's a whole bunch of industry insiders that have great advice, not just about how to develop your career, but also how to be a great advisor. Study for your licensing exams. So one of the expectations for WFA is that even before you sit your CFP, you're going to sit a securities exam. You're going to sit a 65 exam. So if you have bandwidth now to be able to do that, knock it out and be done with it. And then I think the other thing, this is probably the one that I am the best at, which is just be really curious about people. What makes you a really good listener is being very, very curious about people. If you can develop that, it'll be very easy to listen because you're already interested. And then also just accept that you're going to make mistakes. I still make them all the time. Sometimes they're funny, sometimes they're not. But that's part of the learning process. And if you are so afraid of making mistakes that you refuse to try something, you will have already failed. So be accepting of the fact that you're going to make mistakes. Try to find a safe space to make them. We like to say on my team, you're going to fail, but we're never going to let anybody fail in front of a client. So don't worry. A good team won't let you make a fool of yourself. But this is the time to start trying new things and sort of going out on a ledge, because you're going to have to do it one day or other. It might as well be today.
Leah, one maybe point to emphasize on this that's really helped me, and I did this maybe in college and in the years directly after, but I've done it even more lately just to develop my own way of phrasing things. I think like if I were to like think about like my like first couple years, you're really just, like Leo was describing, you're like a sponge of information, and you're learning how, your firm may deliver advice, and how, your senior advisors that you work with communicate with clients, and you're trying to just, pick up the standards, learn the framework. So you're not really kind of developing your own style, but over time, as you figure out, which way, your news sources and methods of retaining information, and then you develop your own voice and style, it starts to, get even more fun. And also you figure out which ways, you're gonna make sure you're spending time absorbing information the most efficient way that you can. So for me, that's podcasts. Well, when I had a lot of commuting to do, it was podcasts where you sit and, stare at the steering wheel, listen to, I think you guys had Ben Carlson on your podcast. So Animal Spirits is one of my favorite industry podcasts. His Wealth of Common Sense article that I'm sure you guys have endorsed to subscribe to is absolute gold. And he has written pretty much every day for the last, I mean, I can't even, like, I have so many of them booked. You guys probably have this too. You have all these articles that you're going to read, and you keep these tabs open on your computer so you never shut it down. And there's like, I can't even keep up with how many articles he puts out there, but those are all incredibly practical. I use and absorb those and as talking points with clients on top of the, materials that you guys will get at whatever firm you work at. Those are really good resources that professionals are using in client meetings all the time.
Yeah, I think that's a great point. Something that we didn't mention is that no matter how experienced you become, you should never stop learning, nor do you ever stop just poaching information from other professionals. You will always do that, because sometimes Ben Carlson just says it way better than any of us could. And if he's already done the work, why would we not profit from that? So I 100% agree, Marshall, although I do shut down my web browser to refresh it. So I recommend you do that.
On a monthly basis, at least.
First of the month, refresh.
The next thing we wanted to talk through with you guys is the career path and trajectory within our firm. So you see here, the first thing is an intern. Not everyone starts at the intern level, but a majority of our associates do. And while you're an intern, you're going to be doing things like preparing investment policy statements, taking care of CRM updates, financial planning updates, portfolio management, all those different tools, and understanding really what you can do with them and what you need to be able to do with them. And then the next one is attending client meetings, taking notes, and then helping out the associate or the FA with those follow-up tasks. And really the way that I like to think of our internship program is it's a crash course to learning what you need to be able to do to be an effective associate. So really you can think of it as a training program directly to prepare you to become an associate advisor within our firm. But once you do get promoted or hired as an associate advisor, you're going to be preparing your financial plans, doing portfolio reviews, participating more so in client meetings rather than sitting back and kind of listening, taking care of client requests, and then helping out with training and mentoring interns.
All right. So, kind of piggybacking off what Josh was just describing, then the next role, and I should say that none of the transitions between these different positions aren't, okay, I go to bed on Thursday, an associate advisor, I wake up on Friday as a financial advisor. Now I have a whole new set of responsibilities that I have to deal with. All these things should feel natural, because as with any, career position that you're going to take in life, there's going to be responsibilities that you take on that, are for the role above you. So you're going to be introduced to the responsibilities, or at least it should work that way, how we view it. You're going to be taking on responsibilities that are even beyond the set that are in your current role, and that should be exciting, because it's growing you in your career, it's introducing new experiences, it's allowing you to grow and develop. And so everything that Josh described the associate is doing, but then all the while they're kind of solidifying their role as secondary advisor for some existing clients. And then over time, as that trust and credibility is built with that client relationship, they evolve into, the primary or the lead advisor role. And as on top of that, you build credibility, you gain your CFP, maybe another credential, you learn how to articulate why our firm is unique and special and why new clients should work with us. And then you can develop a way to grow new business for the firm. Not everyone has a strong desire to do that, but at least some advisors on your team are going to have to do that. Otherwise, you're not going to be able to continue to, give yourself raises and and hire new people. And so that naturally comes on over time. And like I said, not everyone has a business development persona. Not everyone got into the industry because they want to do that. And that's totally okay. You just need to have someone else in your team that complements you if you want to be more of a client service focused advisor. And then it says direct development of financial plans. Basically, you go from preparing to reviewing to overseeing and making sure things are going okay. And as a natural progression, you go from, maybe articulating certain planning recommendations in the client meeting after you prepare them. And that's the best way to feel confident in doing it is, you already did all of the preparation and the review, and now you're getting to a point where you can do without even preparing the plan yourself. You're just reviewing someone else's work. And then you get, to a point over time where maybe you don't even need to be sitting in those conversations in the client meeting because the associate or the financial advisor can do it. And all the while you're going into a role into financial advisor, senior financial advisor are, the titles that we use, but they could be different titles at a different firm. And then, kind of I was gonna say final stage, that makes it seem like they're like going off into greener pastures after that. But
End game.
Yeah.
Advisor end game.
Right, exactly. This is the final chapter. Firm leader or principal, it's called in our firm. So, like if you work for a registered investment advisor, a lot of them have partners or principals that are owners in the firm. And so, similar roles to what they may be overseeing, not even just clients anymore, but the team and making sure the team's developed. They have enough experience where they can coach other advisors consistently and reliably. Maybe for some of the key clients that are the most important, that may be paying the firm the most amount of money, they're making sure that those clients are staying happy, but also making sure the team is growing and developing. And you're really acting as a mentor, particularly for, maybe advisors that are still experienced, but need some coaching and development. And lastly, we'd be remiss if we didn't bring up opportunities that we have. So right now, as far as in internships or associate roles, we do have a couple of associate advisor openings in our Eau Claire, Wisconsin and Green Bay, Wisconsin offices, as well as our Minneapolis location. We also have an internship opening, and I will say that because we're new to your guys' awesome organization and school, this may be standard, but just because we don't know all of the schools that are recruiting out of here, but our normal process as far as internships for the summer, that recruiting begins in the fall. So for internships this summer, we're recruiting last fall, going to career fairs, speaking to groups like you guys, introducing not only Wipfli Financial, but what opportunities they're going to be. Because normally we have, there isn't like a normal, but we usually have, anywhere between 5 to 15 internship openings, throughout the summer in our various offices. So that recruiting for then next summer is going to begin. It's starting to begin late summer. Students are starting to reach out, as I'm sure you guys have done too, and then very early fall, beginning of the semester, you guys probably have a career fair, within a month of that, and that's usually where the interview process starts.
All right, so we're gonna go ahead. Yes, questions.
A quick question, Leah. Where do we go? Where do people go if they're interested in applying for that? Or like, where do they, is there an email list? How do they get a hold of that application when it comes out?
Yep, so you just have to go to wipflifinancial.com and under the careers page. So I can drop that in the chat. But we do our entire application process online initially. One thing that is something to be aware of with Wipfli Financial, unlike maybe some other firms that are national, we hire by team. And what that means is that we don't just hire you for WFA. You will first have sort of like a screener interview with our HR director, and then your resume would then be passed on to the regional team that you would be working with. So if you applied for the Minneapolis office, you're first going to be reviewed by HR, and then you're actually going to go and be interviewed by the Minneapolis team. And each team sort of has their own process for how they do that. So the Madison team might just interview you once. The Minneapolis team might interview you twice. But that's up to the regional team. So we don't just hire bodies and then sort of like sort them around. You get hired specifically for your fit within your team. And we will pause here for questions that you guys have. That was a lot of information, so apologies. And we will move on to the eMoney demo after we field any questions that you have about this particular portion.
Yes, our firm is the best registered investment advisory firm out there, so you don't need to ask that.
And Marshall is not biased.
You mentioned that you read an article on NFTs earlier. What are your opinions on it?
So I am still very flummoxed as to who thought that this should be a thing to begin with. If I'm going to be completely frank, Justin, I've known Justin for over 2 years now. I've known Professor Schiesel for over 2 years now, and they will tell you I will never be anything but completely direct with you. No idea why somebody wanted to make NFTs. Aside from, it looks to me like the market for NFTs is largely self-perpetuating. So I don't think that they're an investment product. I will say that. They don't really look like an investment. I would say that my stance on cryptocurrencies is the same because they aren't cash flowing. So from an investment standpoint, when we're talking about investment assets for the purpose of growth, there's no real value attached to NFTs, just like there's no real value attached to Bitcoin. That doesn't mean that people won't pay a lot of money for it. That's a different thing. That's a whole different matter. But I think NFTs I think that they exist mostly to try to commercialize blockchain technology. So right now, there's no cash flow attached to blockchain technology, even though it is clearly going to change and revolutionize a lot of the way that we do things and already has. So I think NFTs are just one of those ways that people are trying to commercialize them or to capitalize them. But I don't really see the fit within the marketplace aside from art. Digital art, it makes a lot of sense, but it also seems kind of like a weird flex to me. But I don't know what your opinion is, Marshall.
I think it's something that is a cause of interest rates potentially being low, and people are not super thrilled about throwing their money. Well, people that don't have great advisors educating them on the wonders of diversified low cost portfolios love to add new and exciting potential investment opportunities to the portfolio. But yeah, I mean, it's, we kind of, I don't mean this to be dismissive at all, like to throw it in like the speculative bucket, but that kind of is, like what Leah described. There's a value that you can place on stocks and bonds because they yield cash, but there's not necessarily something for long-term intrinsic value for something like an NFT or a cryptocurrency. But that doesn't mean that it's not opening doors for, particularly with blockchain, as Leah described. And, I'm sure you guys kind of have your own resources to make your own decisions on that. But at this point, it's not something that, we're recommending to clients, even if they have their own Bitcoin node that they're validating block transactions for. So
Marshall just showed our entire team a picture of one of his clients has a Bitcoin node that they are validating blockchain transactions on. So we saw that today. So I think that it's an interesting thing, but I don't think the thing that it is an investment. I think it might become something like an investment, but I don't think in its current form it will be. So NFTs themselves, I don't think will ever become cash flowing, which I think broadly speaking within how we define investments, at least for the purposes of recommendations for our clients, we expect an asset that we're going to hold to have cash flow attached to it in one form or another.
All right, thank you. I appreciate that.
good question.
What are your thoughts about NFTs?
Well, I just think there's a scarcity issue where people can just pump out as many as they want, and I think it's more of a seller's avenue than more of a collector. If you're trying to make a quick buck, you can create an NFT to these wealthy people that are almost throwing their money at this new wave of not so much investing, but like you said, blockchain. It's a new thing. People are very interested in Bitcoin and crypto like that. So
Yeah.
I mean, yeah, it's a new. I mean, we actually talked about this in a podcast a couple weeks ago. Justin, myself, and a couple other members of WMA. So it's something that we like talking about, but there's always that uncertainty that there will be no value, like no longevity for them.
Yep. Yeah. And I think especially with NFTs, that is a risk because of the fact that they are a digital asset. So literally you can lose your wallet. It has happened. You have to have a special wallet to hold the NFT to begin with. Then these things are also just power hungry, which, and I mean that in an electricity sense, not a political sense. But there are some very interesting facets of NFTs, and I completely agree that they do appear to be the new hotness with all of the fast money. But that's why I said it seems like a weird flex, because it seems that it's the fast money that they're buying these things because they're shiny. Which in the investment world, when you work with actual people, when you work with actual people, not institutional investors, the last thing you want to do is chase the hot new thing, because as we saw with the markets over the last year, if something looks hot, it's probably overheated. You're going to pay too much for it. So even if you're talking about it from a sheer numbers perspective, it just doesn't make sense.
Have you been following the Michael Batnick Top Shot thing, Leah, with his NFTs at all?
Michael Batnick and I have a love-hate relationship.
Okay.
I do love him deeply, but there are moments where I'm just like, what are you doing?
Well, this
What
could
are you
probably be
doing?
this is probably one of them. So he's gone into this whole NFT craze, but you said something that perked my interest. He can't get his money off the blockchain. I know that was the last I heard, is put all this money in there and he taking him weeks to get it off. So
Yeah. And I mean, it's basically, you take the volatility of Bitcoin, combine it with the scarcity of an NFT, and then you add bandwidth in there, and it just seems, I don't know, maybe I'm just simple, but I don't see the point. I don't see the point of all that racket. So
Yeah, I don't want to cut. I was gonna say I don't want to cut you off, but I want to give enough time to go through e-money. And I think, do we have a hard cut at 6:30, Justin? Is that right? Roughly.
Was muted. No, we don't. We usually like to, keep it close, but yeah, not a hard stop. So.
Okay. Yep. I just want to make sure that we have enough time to go through this stuff, and then we can open it back up to questions at the end for anyone who wants to stick around. So I'm gonna go ahead and share my screen. And let me do this.
Quick question. Has anybody actually run a financial plan through financial planning software like this before?
This is great timing. Us in the advanced class we do Money Guide Pro, but we are actually in the middle of our Money Guide Pro project right now. So
that's what UW uses too. Hate that thing. So this is e-money.
Yes. So as Leah alluded to, this is eMoney. This is the financial planning software that our firm uses. And this is a mock client scenario that we put together for you guys just to kind of demonstrate the different tools and things that we can use to show clients and for clients to look at on their own. So this is the overview page of an eMoney client. So you can see that on this page, it kind of gives an overview of the client's net worth and breaks it down between net worth and investments. And then as well shows an overview of their asset allocation across all of their accounts and lists their accounts and anything they own below. Moving on to the next tab, facts. This is where we can enter in anything relevant to the client's situation. So you can see here that we've entered in their names, their date of birth, their intended retirement ages, life expectancy, any important family members, so children or grandparents, grandchildren, things like that. We can enter that in here. The next thing I want to take you to on this left side is we can look through all of these different tabs. The one that I want to go to next is net worth, which is where we can enter in all of their investments, property, things like that. So you can see here that they have multiple different accounts. Some of them are employer accounts, some of them are retirement accounts such as IRAs, and then some taxable accounts. And all of these accounts have different growth rates assigned to them. So we have different model portfolios for our clients, and given the different portfolios, we have assumed growth rates that we use for these things, and we can enter those in and for our clients to use. Leah, what else am I forgetting on this page here? Or Marshall, if you guys want to chime in.
There's a lot of assumptions that are built in here. One of the things that I don't like about Money Guide Pro, or at least the version that I used when I was in school, was the fact that when you opened up the program, you saw all the guts of the program right away, and you had to finagle every single tiny little detail inside the program. I felt like it was not very user friendly. The nice thing about eMoney is that you do not see all the guts. They're still there, but they are not in your face when you are walking through this plan with a client. So underneath each one of these assets is a whole host of assumptions. Josh already mentioned the growth rate assumptions, but we're also assuming things like long-term inflation is going to be 2%. That's going to factor into everything inside of this plan. We have other base assumptions, like we assume that a client is going to spend all the money they're not dedicating to savings. We don't assume that they just pile up cash in a back room and leave it there. So as we're going through this, just be aware that if you have seen Money Guide Pro, this is going to look different. It's not because the assumptions and the sort of technical bits don't exist. It's because eMoney doesn't feel the need to just put it out there for everybody to see.
Right. So we can enter in things. So I showed you this net worth page, includes anything that attributes to their net worth, their home, their mortgages, anything like that. We can enter in their income. So if current income, all of this, like Leah said, has different growth rates and assumptions assigned to it. So like earnings are assumed to grow with inflation. It can run an estimated social security amount at different retirement ages. So we can change this to show different ages, what an estimated amount would be for an annual Social Security benefit. We can factor in expenses, so how much a client spends in a year, what their contributions are to retirement accounts, employer and employee contributions, so if they have a match component to their employer plan, things like that. Anything else, Leah?
So this is just the input section. There's two other sections to this program. Then I think the next one we should go to is reports. So when we're walking a client through this plan, we actually review financial plans with all of our clients at least once a year, sometimes more. So if we have a client who's going through a big transaction like a business sale, we might meet with them significantly more than 3 times a year, depending on what's happening with their lives. But we always make a point to review their financial plan at least annually. And this is an area of the program that we spend a lot of time. So reports allow us not just to explain to clients sort of what's the takeaway from their financial plan, but it allows us to have sort of aggregated data that we can use to make decisions. Josh, you want to go to the cash flow report? So you can see that this is a lot of numbers and columns. What this report does is exactly what it sounds. It tells you what the net cash flow for a client's plan is going to be year by year. And this screen allows us to do a few things. First, there's a net cash flow column that tells us whether our client is spending from assets or if they are accumulating assets. So we see a bunch of negatives, we know that they're spending from assets. If we see a bunch of zeros, that means that they are not spending from assets. It also lets us verify that all of our inputs are correct. So the more skilled you become at using this program, the easier it is to tell that you've done it right. This is the first place that I go when I build a client financial plan. And then if you want to scroll up, Josh, let's just go to the decision center. Ultimately, what we want to get to with a client is we want to be able to show them this screen, which is a projection of their liquid assets over their lifetime. You can see Frank and Joanna are not in good shape. This is very unfortunate. We usually don't see client plans that look like this, but that doesn't mean that all of our client plans are a straight shot up. What this is actually modeling is a Monte Carlo simulation, and this is modeling the median return. So we can use this screen to sort of explain to a client, number one, where they're at, because this is a lot easier to understand than all those columns. And the other thing that we can do in Decision Center is we can layer on different assumptions. So right now, Frank and Joanna, it's not looking good, but if they change certain behaviors, they might actually see a better chance of success. So this program allows you to create different assumptions and just toggle them on and off. So Josh, why don't we sell the vacation house for $350,000? So if they decide to sell an illiquid asset, naturally one would expect that their liquid assets would go up, which is what it does. The blue lines are the base scenario and the green lines are the difference between the base scenario and the new outcome. So this is a tool that we use very frequently with clients when they're asking us things like, can I afford to buy a second house? We build it into the decision center and we show them what the impact would be if they were to buy a second house. So that is a very quick and dirty explanation of our financial planning software. Obviously, it can get very technical, but any questions about how we use this tool or eMoney specifically?
Leah, maybe.
Yeah.
Well, go ahead,
Sorry.
Andrew. Ask your question.
All right. Yeah. So I use this program like a little bit at my job to do like just to help with the appointment prep and like update values. And the only like real integration I know about is Zillow because it's pretty simple. Do you guys utilize a lot of the integrations, or you kind of use this program as like a standalone thing?
Yeah, that's a great question. We do use a lot of integrations. We use 3 primarily. So when you are managing assets, you probably have the ability to create what's called an advisor side connection. So we manage client accounts through TD Ameritrade or Schwab, which you may all be aware by now. They will soon be the same thing, which I have my opinions on that. But we can actually pull in a client's accounts through Schwab, or we can pull it in through a reporting software we use called Tamarack. And that will automatically update all of their account values on a continuous basis. Clients can also build their own connections. So if you have a credit card through Citibank, you can connect your Citibank credit card and it will pull in all of your expenses. And then there's a portion of this program that is only seen by the client where they can start categorizing their expenses and grouping them, just like you would with like a mint.com. I always describe it to clients as mint.com on steroids because they're familiar with financial planning software. That's probably what they use. So there's hundreds of integrations that eMoney has with all kinds of different vendors, all the way down to like the University of Wisconsin Credit Union. They have a connection for that, and they're always building new ones. So almost if you have an online login for an account, you can probably connect it to eMoney.
Okay, sounds good. I didn't know it went that in depth. I appreciate that.
Yep. Doesn't mean they always work. but most of the time they do. Who else had a question?
Yeah, I had a question. So Josh, how do our interns and associates, work within this process? Andrew's kind of gave the example of like appointment prep and making sure the tool is ready to go, but maybe articulate for the group how, vital our interns and associates are for this process of building this out for the first time, and also updating it, as Leah said, for annual review meetings with clients.
Yeah, so both as an intern and as an associate advisor, you're responsible for, when we're meeting with new prospects, first of all, building this plan out and entering as much information as you have about that prospect, and making sure that it's making sense, assign proper growth rates, proper account types, and all of that. And then as well as with current clients and clients that we're meeting with on an annual basis or by twice annual basis, you're responsible for, in the week prior, going in here and making sure that all of the accounts have been updated, that the connections are correct, that the growth rates are assigned correctly, that the assumptions for how the accounts are invested are correct, and all those growth rates are right, and making sure that everything is set so that when the advisor goes in, the day before, 2 days before that meeting, they don't have to spend an hour in here making sure that all that stuff is ready.
Yeah, I think that we like to think of it as this financial planning tool, our interns and associates, they own this. So that doesn't mean that our FAs and our SFAs aren't very skilled in it, but this is their baby. And when we build a new client plan, it's the intern and the associates who are going to build it and are going to double check it and are going to make sure that it works. So this is how our associates and interns become very integral to our financial planning process and our client engagements in general.
Right. And this tool, I think it was the first week of my internship, you're trained on how to complete an entire case in this tool. And it's reviewed by an advisor, and they tell you, this is what needs to be updated here. This is how this works. So it's something that is, something you learn right away and you're using almost every single day. I can say for sure that I spend a lot of time in here.
This is also something that our associates, within their first year, they will start running in client meetings. So when we bring interns and associates into client meetings, we don't expect them just to sit there. Especially associates, you have an assigned role, and your role is to actually run the financial planning software and explain it to the client. And as you become more comfortable with explaining the financial plan to the client through eMoney, you become more technically competent and more savvy in providing investment advice in general. I like to think of it as you go from a micro view to a macro view. So when Marshall was talking about sort of the career trajectory, that's the difference between being an intern and an associate and an FA, is as you progress, you start to assimilate all of your prior knowledge and be able to expand the scope of your understanding and your recommendations. So when I meet with Josh before a client meeting, we run through these. And I say, this is what I want you to focus on in this meeting. And we just had a meeting last night where I said, you're going to explain to the client how this particular piece works. You're going to tell them how this strategy works. And that's what we want our associates to be able to do. And that's what we want to be able to develop with them. Any other questions?
Come on, guys. We got a couple more minutes here.
And these can be questions about eMoney or just our firm in general as well, not limited in scope.
Yeah, you can ask about Josh's personal life or whatever.
Or you can tell us what you're following on Wall Street Bets.
Well, let me pose this question to all three of you. So why do you guys like working for Wipfli?
I'm not going to go first.
Spot. Yeah, I put you all on the spot.
I'll start. I think, I'm a new graduate from college, so I think I can maybe, I'm not saying that Marshall and Lee are old, but I can relate probably a little bit more. The reason that I chose WFA is, one, the career trajectory. So starting from an intern to an associate, and I think that the career path makes sense. It's a natural transition from each role, and as you kind of master one role, you move on, and it's a natural progression to the next. The second thing is the team aspect. You're not on your own. I'm not working on my tasks, and nobody else can help me with them. If I need something, I can reach out to Leah, or I can reach out to any of the other members on our team and ask questions, and they're almost always willing to lend a helping hand. And then the third part is I really like the RIA space, and I think that being a CPA affiliated RIA gives us a unique position within the industry to really serve our clients to the highest capability. So that's my answer.
We wrote that down as a script for Josh to say. He stuck to it, so that's good. I mean, those are all the same reasons that I joined Wipfli 25 years ago, and none of them have changed. And I can say, you know, it sounds like oversimplified, but the people are, you know, absolutely everything. And, you know, for all the reasons that Josh described, because they're supportive, because they give you opportunity, responsibility, sometimes more than you think you can handle at times. And it, you know, it pushes you comfortably outside of your comfort zone to where, you know, I mean, board is like the last thing that's on my mind. It's, you know, making sure that I can handle all these new and exciting opportunities. And it is you know, an incredibly innovative firm, and one that really empowers the younger advisors.
Yeah, I think the thing that always sticks out to me when I go into other firms and I meet other advisors working in other firms, the thing that is always unique is the fact that, number one, at my firm, I have never failed in front of a client. I have seen my boss take the heat for me twice, and I've never felt worse in my entire life. And he and everyone in our team, in our firm in general, we like you to be somewhere between 80 and 90% confident you can do something. If you're 100%, we haven't pushed you hard enough. Like, you need to continue to grow. You need to continue to evolve. And we're not a firm that rests on our laurels, as Marshall pointed out. Doesn't mean we don't fail. Sometimes we fail spectacularly. But I think that that's admirable. And I like that we continue to do that. I like that we create a safe space to fail. And I like that as a young advisor, I mean, I'm 5 years in. The amount of responsibility that I have is a little bit frightening, not just to me, but I'm very concerned that other people listen to my opinions. But that's the fact of the matter. I mean, our CEO wants to know what young advisors think. Our CEO is aware that young advisors are the future of our firm, and they pay attention. So when we say something that we think is a problem, we don't have to worry about it not being heard. It doesn't mean it's going to get fixed immediately. I mean, there are priorities, but you will always be heard. And I think that that is something that you can't say about a lot of firms.
Thank you. Great answers.
Josh's was the best answer.
Agreed.
Plus, you get the script for him.
Yeah.
Well, Justin, you didn't have to point that out again. What are the hot topics you guys are talking about right now?